Defiance has two popular S&P 500 high-yield ETFs, WDTE and SPYT. Although they are both based on the S&P 500, they have important differences you need to know about. Today, I pit them against each other and declare my winner. Stay tuned because there are huge changes coming to one of these funds that you absolutely need to know about, whether you already own shares or are thinking of investing. I'll also update you on where things stand with my small account ETFs. I'm on the hunt for an infinite stream of dividend income. It begins with my plan to turn $1,000 of Robinhood's money into $1,000 of my money. I'll go over a few updates to my small account margin portfolio before we get to the Defiance funds. If you're new to the channel, please check out the first 5 videos in this series for detailed information on my strategy, margin, and my fund choices. And of course, you need to do your own research for your investments. Let's start off with dividends for the week. Nivy paid me 47 cents per share, which totaled $4.63, and reinvested half into SPYT and half back into the fund. This payout was the lowest per share value that I've received so far, but it's been hanging around 50 cents per share, which isn't bad. Because I've been reinvesting half of the dividends, even though the per share amount went down this week, the total I received was higher than some previous distributions with a higher per share rate. Koi only paid me 41 cents per share this week, which is really low, second lowest so far. In fact, it was so low that when I split it in half, I wasn't able to reinvest the 92 cents back into Koi yet. I'm going to have to wait until next week. I hit an interesting milestone with SPYT this week. As you can see, I've been making lots of small purchases of shares with half the dividends received from all of my ETFs, and I've finally reached 1 share of SPYT. I know it's not a lot, but considering I only took out $1,000 on margin and it's only been about a month and a half, I'm pretty impressed that I've so far been able to build up an entire share of a $50 ETF. And of course, this is scalable to larger accounts. I recognize that this is a small portfolio, but I think it's important for people to see that you can do a lot even if you have a small portfolio. Taking a look at the account as a whole, I was up about 1.5% in equity this week. Not bad. You can see my buying power is at 92 cents. This is the amount of the dividend from Koi that I'm not able to reinvest because I need at least $1 to buy back into Koi. I'm 4.62% above my maintenance margin, which is really close to 5%. Although it's not a big deal, I receive a notice every day from Robinhood warning me about my margin maintenance, so I'll be happy when I get to 5%. Koi was the big winner this week, up about 9.5%. It's good to see it have a positive week. Nivy was flat for the week. Misty was up a little over 1%. And Snowy was down a little over 1%. So 3 out of the 4 ETFs were up on the week. So if we take a look at the total returns for the week, although we're still in the red, things improved. I'm only down about 9.75% on the portfolio. Now, let's turn our attention to ETF analysis. Defiance offers over 40 ETFs, but only 2 of them are based on the S&P 500. WDTE and SPYT compete with other heavyweights like SPYI, T-SPY, and XDTE in the high-yield S&P 500 ETF category. Let's figure out which of these Defiance funds leads the way. WDTE, the S&P 500 Enhanced Options and Zero DTE Income ETF, is the older of the funds and was known by the ticker JEPY when it was founded in September of 2023. 1 year later, it changed its name to WDTE and also changed from monthly to weekly distributions. It currently offers a nice yield of about 31%. WDTE does not own the underlying S&P 500 index and generates income by selling daily in-the-money puts. The puts expire the same day, which is why the fund's name includes Zero DTE, which stands for 0 days to expiration. This strategy limits the upside capture of the index. WDTE also holds short-duration treasuries as collateral, and the yield from these supplements the option premiums. The margin maintenance on Robinhood is low, at just 25%. SPYT is the Defiance S&P 500 Income Target ETF and was founded about 6 months after WDTE. It pays out monthly, not weekly like WDTE, and has a current yield of about 21%. and this is almost exactly what SPYT targets. Its stated goal is a 20% monthly distribution. SPYT generates income by selling daily at the money or near the money call spreads. It holds the iShares S&P 500 ETF IVV. The fact that it holds the underlying assets helps the value of the ETF appreciate along with the index. Like WDTE, Robinhood is not too concerned with SPYT as a marginable investment, requiring just 25% margin maintenance. I don't talk much about fund expenses on this channel because to me, the bottom line is the ETF's performance. I'll accept higher fees if I get a higher return, but that's important to a lot of people, so I added it here. WDTE is just a bit pricier. Now let's take a look at how the funds have performed. SPYT is the younger fund, so we'll compare back to when it was founded on March 7th, 2024. That gives us a pretty decent amount of time for comparison. I'll start with dividend consistency on seekingalpha.com. I'm not comparing dollar amounts. Rather, I'm looking to see if the dividends hold steady, are really volatile, or if there's an upward or downward trend. Once WDTE changed to weekly payouts, the dividend flattened out considerably, which I think is a good thing. SPYT targets a 20% return, and they've done a good job staying in that 19, 20 to 21% range. Nothing too remarkable in this comparison. Next is share price return. I added IVV to the chart so we can compare the ETF's performance to the S&P 500, and because SPYT is based on this particular fund. Both funds tell you that income, not capital appreciation, is the priority. However, I personally try to avoid funds with significant NAV erosion. It's possible an income investor like me may hold on to an investment for years or even decades. So a stable share price, when compared to the underlying stock or index, is important to me. Going back to March 2024, there was a large gap between the share price returns of the two ETFs and the S&P 500. While the index, represented by IVV, is up almost 28%, SPYT is down 9%, and WDTE is down a whopping 35%. There's a 63-point spread between the share price return of WDTE and IVV. There's a smaller but significant spread of 35 points between SPYT and IVV. This is an ugly picture for both, but particularly for WDTE. Now we turn to the big one, total return, and at least they are all positive. The total return chart paints a much better picture for WDTE, although you can still clearly see the gaps between the two funds and the S&P 500. SPYT is only about 7 percentage points behind the S&P 500. WDTE is about 5 points behind SPYT and 12 below IVV. WDTE made up a lot of ground in declining share price with a higher distribution. As expected, we see a similar picture at totalrealreturns.com. Here you can easily see how the total return differences translate into a hypothetical investment of $10,000. WDTE did better than both SPYT and IVV in worse drawdown percentage, only negative 16% compared to minus 18 and 19% for the others. So where does this leave us? If you're an investor who is purely focused on generating the highest possible income and you're comfortable with the NAV erosion and lack of upside potential, WDTE clearly provides the most income and it pays weekly. On the other hand, if you're looking for a balance of high income and the potential for some capital growth, you don't care about weekly distributions, and you prefer a slightly lower expense ratio, SPYT might be the better choice for your portfolio. Looking at all the charts and background information, for me personally, SPYT is the clear winner in my opinion. But wait, there's something very important you need to know about WDTE. The fund is changing its name as well as how it operates, and it could happen as soon as September 23rd of 2025. The changes are significant. On the lighter side, the name will change from the S&P 500 Enhanced Options and Zero DTE Income ETF to the S&P 500 Target 30 Income ETF. You may recall that SPYT uses the word target in its name, and now so will WDTE. Under the fund's new principal investing strategies, WDTE will sell a daily call option spread on the index and target a distribution yield of approximately 30%. So they will move from selling puts to selling call spreads. This is designed to help the fund capture upward price movement in the S&P 500. This could be a game changer for WDTE and make it more similar to SPYT in the target yield and in the way it generates income. These changes were originally set to take effect in May of 2025, but have been delayed 4 times already. We'll have to see if it will actually change by the end of September or if it will be delayed again. Whether you currently own shares of WDTE or are considering an investment, you absolutely have to stay aware of the planned changes to the fund. It seems like a change for the better, but the 30% target is pretty ambitious. The changes to WDTE will also be made to Defiance's QQQY and IWMY funds. So if you own either of those or are thinking about buying, keep on the lookout for these changes. Bottom line is that for me, I'd pick SPYT, and I did. I own some SPYT in another account. The upcoming changes to WDTE are intriguing, and I think they're positive, but we'll have to see how the changes, whenever they happen, impact the NAV erosion issue. Here are my upcoming dividends, just NIVI and KOI for next week. So let me know in the comments, do you prefer WDTE or SPYT? If you found this video helpful or entertaining, please hit the like button and subscribe for future updates. And remember, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. If you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. And good luck hunting those infinite dividends. Take care.